Everyone was waiting for the first mortgage crisis that was supposed to blow up the Canadian real estate market, and it didn't happen. Well, at least not the first time around. But the second wave is hitting right now, and a lot of people who survived round one are going to find out that round two is completely different. Today, we're talking about what's actually happening with mortgage renewals in Canada in 2026, why this second wave is hitting harder than the first, what it means for homeowners in Metro Vancouver, Surrey, South Delta, and all over the Lower Mainland, and what the real danger actually looks like, because it's not what most people think. So let's get into it. Part one, what everyone predicted and what actually happened. Cast your mind back a couple years ago. The Bank of Canada raised interest rates faster than almost any time in history. Went from record low pandemic rates all the way up. I think it was 7 or 8 times in a row. Millions of Canadians who bought at those low rates were eventually going to have to renew. The warnings were everywhere. Foreclosures started, defaults, a market collapse. But here's what's actually happened. About 1.5 million Canadians renewed through the first wave. Some of them took a real hit. Payments went up drastically, and a lot of them had to cut spending. Vacations got canceled, renovations got pushed back, and it affects the entire economy. But the foreclosures didn't really spike the way that people expected. So why? Because homeowners fought to keep their homes. That's just human nature. You're not going to hand back the keys unless you absolutely have no other option. People cut every other dollar of spending around their lifestyle before they would give up their house. And banks help too. They extended amortization periods, stretched the loan out longer to bring the monthly payments down. And the market held together somewhat. Not great, but it held up. That was round one. Round two, it's different. In 2026, another million mortgage renewals are coming due. On paper, that sounds similar to what we've already seen, but the conditions now are worse. Here's what's changed. First, the economy is in rough shape. Weak job numbers, slow GDP growth, real uncertainty around tariffs and what's happening with the US. The job market in BC and across Canada is cooling, and that matters. Because when you lose your job or your hours get cut, the mortgage doesn't care. You're still going to have to spend that money on the mortgage every single month. Second, savings are gone. The homeowners renewing right now are not the same ones that renewed 2 years ago. The people that have already spent 2 or 3 years paying higher prices for groceries, gas, insurance, cost of living, their financial cushion is thinner than ever. A lot of them honestly have no cushion left at all. Part 3, interest rates move the wrong way. Here's something that a lot of people didn't realize. The 5-year fixed mortgage rate is roughly 40 basis points higher today than it was just a few months ago, so that equals 0.4%. That doesn't sound like a lot, but let me show you what that actually means. Let's say you bought a condo in Metro Vancouver for $696,000. You put 10% down. You're renewing now. That 40 basis points move alone adds about $622 to your monthly payment compared to what you were paying before. That's a car payment. $622 every single month. Gone. Over the year, that's almost $8,000 on top of what you're already paying. And why did rates move up? The situation in the Middle East raised oil prices. That raised the cost of absolutely everything that we have. Food, transportation, and goods. That reignited inflation fears. Bond yields went up. And when bond yields go up, fixed mortgage rates follow. So homeowners who were waiting and hoping rates would drop before the renewal didn't really work out. A lot of them are renewing into something worse than they even expected. Part 4, it's not just condos. I want to talk about detached homeowners for a second, because I think they're actually more exposed here than condo owners. Here's a scenario. You bought a detached home in 2021, not the peak of the market, but pretty close. And let's say that the property value hasn't really moved at all. It stayed flat. You're now renewing the mortgage. Your payment goes up. We're talking potentially $1,500 to $2,000 more per month in some cases. But here's the other side of the equation that hits detached homeowners specifically: rental income. A huge percentage of detached homeowners in Metro Vancouver, Tsawwassen, Surrey, Ladner, everywhere, they're counting on a basement suite, a secondary suite, or a laneway home to help carry the mortgage. A lot of people buy their first detached property with some sort of rental suite attached into it. And right now, rents are going down. They're not collapsing, but they're softening month over month. It's actually a pretty bad situation out there. And vacancy rates have improved. So tenants have more options than ever. Some people are literally leaving their 2-bed, 2-bath condo or basement suite just to move, a few minutes away and pay $300-400 a month less than what they're paying in their current rental. So you've got a detached homeowner paying more in their mortgage and collecting less from their suite. Both things moving in the wrong direction at the same time. And then there's a third problem. You can't easily sell in this market. Even if you bought in 2021 and the price hasn't dropped much, once you factor in realtor fees, property transfer tax, closing costs, a lot of these homeowners are breaking even at best. And I would say that most are losing. So if you're stuck paying more, earning less, and you can't sell your way out, that's not a winning equation. Part 5, the real damages in foreclosures. Here's what I want you to understand, and I think it's the part that most people miss. The real economic damage from the mortgage wave is not foreclosures. It's not the wave of bank sales flooding the market. The real damage is in spending. Every dollar goes to a higher mortgage payment is a dollar that doesn't go somewhere else into our economy. It doesn't go to the restaurant down the street. It doesn't go into the contractor doing a renovation. It doesn't go to the local barber shop. And when that money stops flowing through the economy, you see the ripple effect. The restaurant cuts staff. The contractor has fewer jobs. The shop closes early. Those people spend less too because they have to. And this effect compounds. This is what's happening right now with our economy. It's not like it all fell off a cliff. It's not dramatic. It's not all at once, but it's a slow squeeze and we're starting to feel it. In Vancouver, the Lower Mainland, basically everywhere in BC is feeling this more than almost anywhere else in Canada because people here have so much of their income tied up in their monthly housing costs. Everywhere, these markets are where people are being stretched to the limit and don't have a lot of money to spend elsewhere. The real estate here is expensive. The strata fees are high. The property taxes are high. And a lot of people are carrying properties that require everything to go right every single month for the math to even work. When one variable changes, like the mortgage payment going up, the rental income drops, the job gets shaky, the whole thing gets tight very quickly. Part 6, who's actually at risk right now? So who should be worried right now? If you bought a condo in 2021 or 2022 at a high price and you're coming up on renewal, you're facing a significant payment increase. And if your condo's value has dropped, which it has in most parts of Metro Vancouver, you're potentially renewing at a higher mortgage balance against a lower valued property. That's a tough conversation to have with the lender. If you bought a detached home and you're relying on suite income, you need to stress test your numbers right now with current rent estimates. Not what the suite was renting for 2 years ago. You need to look at comparable rentals on the market right now to get a realistic view of what it's worth. If your job or household income has any uncertainty to it, with tariffs, sector slowdowns, whatever it is, you need to be thinking about this well before your renewal date, not the week before. Please don't leave it to the last minute. And if you're a landlord with multiple properties, look at each one individually. Some of those might be carrying very little margin right now, if any. Part 7, what you can actually do. So what do you do with all this information? First, know your renewal date. Start talking to your mortgage broker at least 4 to 6 months before your renewal is up. Look at your options. Get a rate hold, talk to different lenders, different products. Mortgage brokers can help you with all of this, but only if you give yourself enough time to explore them. Second, get your property value assessed realistically, not wishful thinking, not what BC assessment says. Know what your property is actually worth today, because that affects the products that are available to you. Third, if you're a detached homeowner with a suite, run your numbers with a very conservative rental estimate. Don't budget for best case rent. Budget for what the suite is actually likely to bring in right now. Fourth, if selling makes sense, talk to someone about it right now rather than letting your situation get worse. A proactive sale is almost always better than a forced one. If you're in Tsawwassen, Ladner, South Surrey, anywhere in Greater Vancouver, and you want an honest read where your property sits, that's exactly what I do. If I don't specialize in your area, I have another awesome professional that I can help connect you with. So here's the bottom line. The first mortgage wave hit Canada hard, but the market absorbed most of it because conditions were different. People had savings. The economy was okay. Rental income was strong. The second wave is arriving with all of those buffers weakened or gone. Interest rates have moved up at exactly the wrong time. This doesn't mean the market is going to crash overnight. People are always going to fight to hold on to their homes. That's just what we do, but the squeeze is real. And the slow grind on spending and business activity is already happening. I'm going to keep tracking this on this channel and share more videos with you on the renewal data, what's happening with prices in South Delta and all over Greater Vancouver and BC, and whether we start to see more distressed sales come onto the market. If you haven't subscribed yet, now is a great time. The story is not done. More videos are coming out weekly. If you found this useful, hit the thumbs up. It genuinely helps this channel reach more people. If you're in the Greater Vancouver area and you want to talk through your situation, whether you're buying, selling, or just trying to figure out what your options are, reach out. My contact info is going to be below. I'll see you on the next one.